Welcome back to the channel. Thanks for tuning in. So tonight I have um, a how to trade the ICT New York kill zone video. Again, New York kill zone, we're looking at between 8:30 a.m. and 11 a.m. New York time. So today I'm looking at Euro USD. Um, I actually took the trades. I'll show you at the end. So I'm reviewing um, today's New York session, AM session. The time is 13:46. So I'm reviewing between 8:30 and 11. 11 is already marked. So between 8:30 you can see price. Let me mark the opening price there. So this is the opening price at 8:30. So I'm just gonna extend that throughout. I'm gonna call this 8:30 opening price. We see price trading down to sell side liquidity. Buy side liquidity above this high. Buy side liquidity above this high. So as the market goes down, there's people selling this. Their stop losses are gonna be above these highs. So price takes out the stop losses of those who are trying to buy, and then it goes and collects buy side liquidity. So the market will always seek buy side liquidity, sell side liquidity, buy side liquidity, and so forth. After the market collects buy side liquidity above this high at 9:44. So at 9:44 we have buy side liquidity connected. The market trades above the buy side here. It trades into this old fair value gap. This 5-minute fair value gap. So I'm gonna just quickly show you on the 5-minute. This 5-minute fair value gap. So we see price trading to a day on the 1 minute. Is this. So price trades to a day. I've made a video on this. Two, three. Three drives pattern. When you see that, you wait for a market structure shift. You have a swing low. Price takes out the swing low aggressively. We call it sell side below this low. below this low, below this low, below this low. All those stop losses of everyone was trying to buy when the market was going up. They collect all those buy stops. We have this huge fair value gap. We have this huge fair value gap. We also have the order block there. You see the price trading multiple times to the order block. So at 10:22, so at 10:22, you could be comfortable if you were watching price during this time. You could be comfortable selling this, selling the order block there, stop loss, and above the high, and you target liquidity, south side liquidity there, and you can see price trading to it, to liquidity perfectly here. So that's just one. So that's one setup you could take during the New York kill zone. So because you can see it trades to the order block for the first time at 10:22. This fair value gap, we see price trading to it at 10:22 again here. What is that? Silver bullet. There's silver bullet in the forex market between 10 a.m. and 1 p.m. So throughout this channel, I've been mentioning only this the Nasdaq silver bullet on 10 a.m. and 11 a.m. So now I'm telling you a new silver bullet. So when I'm looking at USD, the silver bullet is between 10 a.m. and 1 p.m. So you can see price trading to the fair value gap there. Again, you could sell that for a silver bullet sell, targeting liquidity. Price trades for the first time there and then breaks lower, comes back to trade to the fair value gap once more, and then breaks lower. Above this high, price trades above this previous high here, collecting buy side, swing low, price trades below the swing low aggressively. So that's the 2022 model. So whenever you see me talk about 2022 model, I'm talking about this. It's the ICT 2022 mentorship, where you wait for buy side. So where you wait for buy side liquidity in between the New York kill zone time. So the most important thing here is time, guys. Time. So we can see buy side liquidity being collected there. Swing low, price trades below the swing low, fair value gap, price trades perfectly to the consequent encouragement of the fair value gap. You could sell that for your 2022 model sell. Stop loss. Remember this candle, this fair value gap. You expect you put your stop loss in a manner that price you allow for price to trade to it, but you don't expect it to go up there. So as you can see in this case, it doesn't go. then you target liquidity. So you trade your liquidity perfectly. You could sell it. Price breaks lower. Fair value gap. What time is that? That's 11 o'clock. That's still in between the silver bullet few hour for the forex market for the pairs. So trace to the fair value gap, you could sell that again. So at 11 a.m., that's when the New York kill zone actually ends, right? So you don't want to do much trading except for holding. And if you're not in a trade, you don't want to open a new trade after 11 p.m. after 11 a.m. in forex. But if you're still holding previous trades, then that's perfectly fine. So I just want to quickly show you my